We are excited about the health of the consumer. Therefore, the retail rally could be sustained. What we like is low unemployment. Unemployment at 3.9%, also wage growth at 2.7%, and some stabilizing trends in terms of Amazon, the future of the store, digital. Those are all positives. As we think about themes, we like the high end. Tiffany, LVMH. We also like the low end, Walmart, Costco. And then we like ideas that are un-Amazonable. That includes Planet Fitness and thinking about health and wellness. So there's certain themes we're interested in. There's definitely rapid share shifts, and we think the consumer is in a good place with the wealthier getting wealthy in a very promotional environment at the low end.
Jan, Oliver says go high, go low, and he likes the overall environment. I take it you do too. You call it the best consumer environment in a long, long time.
I like the high, I like the low, I like the middle. I think that we're just having a really strong consumer. We had a strong consumer in May. We're going to have a really strong consumer through the back end unless some exogenous event happens. And we've got the tax cut running through Q3 and Q4. We didn't have that last year, and that's both for the retailer as well as the consumer. So the retailer is giving that back to the consumer, driving more business, and the consumer's got more money in their pocket. We're going to see a strong back half.
A lot of these stocks have made tremendous runs, though. I mean, how much of this do you think is priced in, or?
Well, that's always the problem, right? I don't know that the stocks are going to run as much in the back end as they did the front end, but I still think they've got legs yet to go from the point of view of still increasing in value, because I think we're going to see surprisingly strong earnings in Q3 and Q4 that the market's not really ready for.
Oliver, you just downgraded Nordstrom today. I'm wondering what is behind this, considering Nordstrom's got a big meeting next week, and so why take the stand now? What are you expecting?
Yeah, exactly. What we think at Nordstrom is it's a great company, but fair stock. The valuation's at 14.6 times. That's higher than Macy's and others at about 11 times. Also, the Nordstrom Rack division, which is about 25%, the comps have slowed there, and it's underperformed TJ and Ross. So that's something we're watching. And the market already expects a lot from the stock, including a margin inflection. So expectations could be in the stock. It is a great company. We're comfortable being on the sidelines in terms of being at a market perform rating today, and those are some of our
margin
cautions.
Inflection, Jan. That sounds like take two Advil.
Oliver's killing me here. He and I mostly always agree on these things in retail, and I'm a big fan of Nordstrom's right now. And I actually think that they're going to occupy a space they haven't occupied before, and that's the space that Lord & Taylor and Saks are now in, as well as Neiman Marcus, because they're going to be able to go up as those companies fade. And I also think, since they're the most expensive of the off-price guys, highest price point, they're going to see a lift in the back half that we didn't see in the front half. So I'm actually a fan. Oliver's on the other side.
Right.
Boy, I hope he's wrong.
Hey, Alexandra. Alexandra, come on over here, will you? Oh, Alexandra is Jan's 8-year-old daughter. She just came from dance class. Come on, sit up on your daddy's lap for a sec, will you?
Look how cute she is.
Alexandra, congratulations. Your first TV appearance.
Woohoo!
First time ever on TV.
Now, you read those words that say right there. What do they say? Go ahead. Thanks, Jan Kniffen and Oliver Chen. There you go.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.